The S&P is trading at a critical level. This is a game changer for the index, as whatever it will do next will dictate if this is just a dead cat bounce or a meaningful bullish reversal structure. This is a defining moment for the S&P, and I will tell you guys the most important key points you should watch from here in order to prepare yourself to what is coming. Welcome to the Finance Hydra channel, my dear friends. My name is Nathan. Let's analyze the S&P right now. Today, let's do our multiple time frame analysis on it, starting with the hourly chart, the short term. Short term speaking, the trend is clearly bullish. This week, the S&P did an upwards breakout from this ascending channel, as evidenced by these purple lines over here. We broke this ascending channel upwards. We hit a resistance at 39.50, which was this gap resistance over here, just to drop again back to this triple support level made by the 21 EMA, made by the purple trend line over here of this ascending channel, and by the 38.89, which was a previous top level on the index. We hit this triple resistance level just to bounce to higher levels. Now we are doing higher highs, higher lows. Today we hit the 21 EMA again, along with the 39.50, which was our previous resistance level and now is working as a support level. This movement is very technical and it obeys the principle of polarity in technical analysis. Okay, this is what happened so far. So what to expect next? Well, let's see. First, the index will only resume or reverse this bullish sentiment in the hourly chart if we lose 39.50. If we lose 39.50, the index will probably, most likely, trigger a sharper pullback, potentially in the daily chart. A sharper pullback in the daily chart will take us back to the 21 EMA and to the previous top level, which is supposed to work as a support level for us next around 38.89. So, as far as I know, the index, since it broke the 21 EMA, the previous resistance level, it could easily do a pullback to retest this support area just to bounce again to higher levels and seek, I don't know, the 4,000 points or even higher levels. This is a real possibility because the index is still clearly bullish. The index is bullish in the short term and it is starting to become bullish in the midterm as well. We don't see any meaningful top sign or any bearish structure pointing to a short or mid-term bearish reversal on the index so far. Today's reaction, we drop it a little bit over here, but as long as we stay above 39.50, there is not a single meaningful top sign, there is not a single meaningful bearish reaction. So the index will just remain bullish until it hits the 4,000 points, in my humble opinion, of course. Now, what if the index triggers a sharper pullback and loses the support area in the daily chart over here? This scenario would be quite catastrophic. And this is what we should pay attention right now at this moment, because in the weekly chart, the index is still in a bear trend. It is bullish in the hourly chart, it is bullish in the daily chart, but in the weekly chart, we are still bearish. We have yet to see crystal clear higher highs, higher lows. We only see lower highs, lower lows, and as long as the index remains inside this channel, we can't say that the index will resume the bullish sentiment. We can't say that this bear market is over. The bear market is still on, but right now we are getting close to this purple trend line up here. This purple trend line worked as a resistance level 1, 2, 3, 4 times over here since since January 2022. So yes, it's been 1 year right now that the S&P can't break this resistance. And right now we are near this resistance level again. So what's next? Well, again, as I told you guys, only if we lose 39.50, I believe we are going to trigger a sharper, more meaningful top sign that could make the index drop to lower levels. If the index loses its support level in the daily chart over here around 38.89. Probably, most likely, the index will resume the bearish sentiment in the long term in the weekly chart, and in this scenario we would retest again the bottom line of this channel, which is, I don't know, near 3200, which is a quite interesting technical key point, because the 3200 is around this area, right? This area over here, which did work as a top level on June 2020 and as a support level on September 2020 and on October 2020 as well. So this reaction is totally possible. However, as long as we don't trigger any meaningful bearish top sign, we can't say that this is going to happen. In addition, in the monthly chart, and by the way, if you're still watching this video and you are not my subscriber, there are literally 50% chances you are not my subscriber. Why are you not my subscriber yet? You probably like it, the content, am I right? So click on the like button, subscribe this channel, and of course, join the top 5% of traders. I'm not joking. We are literally the top 5% of traders that can actually make money while beating this market. All right, we can beat the market's performance by a mile. Check my website. The link is in the description of this video. My track record is public and it speaks by itself. So I'm gonna shut up right now. Let's take a look at the monthly chart. In the monthly chart, it is quite important to see the index reacting right now because we are just above the 38.2% Fibonacci's retracement, and we are doing a meaningful reaction. This is quite good. But again, this is why it is so important to see the index above its key support levels. In the weekly chart, the index found a support at the 50% Fibonacci's retracement. In the monthly chart, we are above the 38.2% Fibonacci's retracement over here. In addition, if we lose this retracement, probably most likely we are going to seek the next retracement, because this is what the index has been doing, right? We hit a retracement, we bounce, just to lose it again, and then we bounce. If we lose the first retracement again, probably it is going to ignore the 50% Fibonacci's retracement and seek the 61.8% Fibonacci's retracement, which is around 3180. I'm so sorry, it is around 3200 again. So therefore, the 3200 would be our next technical target on the S&P if it triggers its bearish structures. Now, Nathan, you are so bearish right now. What if the S&P breaks this descending channel over here? What if we do an upwards breakout? In this scenario, we would see, for the first time since this bear market started, a crystal clear bullish reversal structure called bullish pivot point. In this scenario, our first target, it is going to be 4,300, the first target. All right, but probably it is going to seek higher levels because it is going to put an end on this bear market. So if you are asking when will this bear market will be over here, well, it will be over when it breaks this pivot point, when it breaks free from this descending channel. This is what it takes for the S&P to reverse the bear market over here. So right now is a defining moment for the index. We are just at an extremely critical situation right now, and depending on how it will react, it will dictate if we are heading to the 4,300 or to the 3,200. I don't know. I don't need to know what's going to happen next because remember, trading is reactive, it is not predictive. I really appreciate your audience, my dear friends. Subscribe to this channel, click on the like button. Have a great weekend. Stay safe. Farewell.